Welcome to TradeTheNBA.com. This is John. This report is for the 20th of May. Not much of a surprise on Friday. We were looking at the reality that shorts had been fading within this situation, and that was going to make it very tough on this buy signal here to really elevate things too much further. I mean, we hit that 76%, pretty much rejected right off of it. We've now filled everything we were looking for except for that final dip here below the red line, which would take us back into that 2760 range. That still may be premature before we get there, though. We're at that key point, negative 455, so green has moved above cyan, which should help maintain the current buy structure, though you've got pretty weak from a short-term buyer standpoint, as well as long-term buyers just kind of softly pedaling here. More likely what happens is you end up coming back and doing a version, either a retest back to the 50% here, or a little bit further towards the previous low before making another, which effectively creates that kind of effective, some people call it a double bottom. You really can't be at the double bottom when you're this far up in the market, but similar concept. Testing the lows is equivalently what we might refer to it as. From a NASDAQ standpoint, likewise, same situation. It's also crossed to the positive. But that just now means that it's going to have to maintain. And really, what you were in, like this for the NASDAQ, you get to see that red break above negative 7.5, moving into a new zone that will give added oomph to the market. And the weakness of the euro is also not giving much impetus to the S&P. It just indicates another softness, though we had suggested that there's the potential for this low to be taken out as we move into that lower range near towards 108 from a dollar standpoint. And gold, of course, couldn't maintain where it was at. It had already satisfied the dip below the red line here, so it wasn't necessary, but it made a new dip below the red line here on the extreme, meaning the lows that were tested right here, the green, we're going to have to, the green ABM, we're going to have to be revisited, and sure enough, capped down to that from an ETF standpoint. So it's interesting to look at the ETF versus the futures and seeing how, you know, these massive gaps take place, but from a 24-hour future standpoint, makes it a lot easier. So off the nice little buy configuration that started at the bottom there, we ended up getting this peak, and this was an interesting one to talk about because we look for these situations where you have the green crossing below, red, orange spikes up, steel crosses below, all at the same time. The difficulty with this one is it's happening right at the same point that magenta is breaking above into the plus 15 category, making it likely that you're going to continue to suffer a little bit more upside pressure on it. But same configuration happens a couple bars later, much different configuration, because now you've already had that elevation of the magenta. Now, while it can stay up at that peak for some time, you end up with a situation where risk to reward wise, you're up near the 100% range, and you've got just the configuration because you're no longer making a higher high kind of concept with the red DOC. And sure enough, in this particular case, it works out pretty well. You end up with a clean also DOC spread, the full signaling with the cyan breaking above red, green rejecting. I mean, this is all opening right at the same time. And what you have to watch for, though, in this one is, again, that steel crossing red, where it stabilizes, and then boom, the crossover here. The only difference to let you know that you could stay with the short was no orange dip below. Ends up making a little bit lower move. And even if I go back just a fraction to, I had all these positive extremes off this rise. So my expectation from this 100% mark really was only to the 76, that 2880, and I was going to be looking to see what the readings were at that particular point. Now in this case, it sort of said, okay, you can continue to let that go, and that left the next target at the 2870, or the balance fill of my positive extremes, which was right around the 74-ish, 75 range, and successfully met that beautifully. We ended up with another rollover. Again, look at the beautiful rejection of green-orange with the steel crossing. So you could say to me, oh, I had the same thing here. Not really. The big difference when you get that steel crossover at the exact same time And in this case, instead of breaking into a new zone with red DOC, with this configuration here, you have just the opposite. It's already been above it and starting to plateau. So some of those are the key distinctions that certainly make a difference, even particularly on the upside configuration when you look at the exact same thing. Again, no reset of steel coming through here, so I know any X I get in this is likely not to do very much or have sustained legs. And sure enough, you make a new low, but you make that new low under the higher red DOC, so it's just a matter then of waiting for that full stabilization. It starts to take place right about here before the opening in that of the futures for Sunday, and that's where it begins to spread and take off a little bit. I don't have it marked the same way on the Yocon Paint 2, but I can slide that up here for you to look at. Similar construct, a little bit more shrunken down. Let's expand that a little bit to make it easier to get a visual on. There we go. That brings us to the current state of things. As always, though, I will put up any additional charts as they are relevant, and we will continue to just have this market at our fingertips. I think it's been pretty good with this little soft period. It hasn't really been anything of significance. We still have a growing economy, and I think that's where all eyes are just going to keep focusing on. Is there going to be expanded growth? Expanded growth means there's going to be higher market. Plain and simple, we're still looking for that 3K number, though 2950 range was originally what I had talked about, many years back, as we were looking for this to build with the post-war. And it's something that we talked about a long time ago. The benefits of that, even though we're running these big deficits and everything else, it just happens to be the way the market reacts post-conflict. Number of years after every major conflict that takes place, you get this kind of expansion. Anyway, that's the long and the short of it for now. As always, trade well and look for me on Skype chat.